Hello, everybody, and welcome to the Plus3 Futures and Commodities show. It is July 30th in the early evening here when we're recording. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How we doing, Barrie?
Doing pretty good. Doing pretty good.
Yeah, had quite a week this past week. Okay, so Bitcoin. Well, the interesting thing, while Bitcoin has been bullish, is our resistance level is holding like a champ.
And we're making higher lows into it. So it's kind of compressing, right? It's pushing.
Yeah, it's compressing. And, to me, it looks like we're going to break higher. And, the question for me is more of if once we break this and go into here on the next pullback, can we hold, this?
Yeah, what is that level? What do you got there?
The full square there, call it
24,500.
24,550 area.
Okay.
So I think, given this curl, the pattern we see here and the higher lows, as you pointed out, most likely we're going to push through here. It's just, what do we do? Do we push through and fail? Do we push up and sit on top? That's the big question, because that's going to tell us, do we have a decent chance to move higher and test this half square, all the way at 33,400, or are we just gonna, push here, maybe go an eighth to fool everybody and then come crashing right back down through there? So that's where I am on Bitcoin. Anything else to add, Barrie, looking at the chart here?
Well, I think if the trend lines are hold on the next pullback, it's probably a go. Next time up, it's probably going to break through those and run up and at least get to 30, test 30 and maybe a little higher. So, yeah.
So we'll see. I mean, listen, with risk acting the way it has been, it wouldn't be surprising to see us push through that, that resistance there. And it's just what comes next is what we don't really know yet. So that's what we're waiting to see. All right, man, let's get into the big five, because a lot happened this week, not only there, but in the commodities world. So it's time to be active. So let me flip it over.
All right. And what are you going to cover afterwards?
I'm going to cover the grains: wheat, corn, soybeans. You're covering gold, but gold looks good. We're going to talk about silver and copper here. We're going to talk about cotton and coffee.
All right.
So we got a lot to cover. There's the little devil, the E-mini.
Yeah, well, last week was one of those easy ones, that you wait for. And it's funny, we talked about that, I don't know, week before before that, and we were saying how, when it's choppy and messy, just got to be patient and wait for the setup and things to run. And picking it up there, we left off talking about this 50% of the square, around 39 right in there, and we said once we break out, if we can hold that, then we have about 150 point run left in it without any resistance, right up into here, the box, right? And of course we exceeded those expectations, which is just fine. So now we're left with what's next.
That's it.
I'll tell you what, though, coming into next week, I would think, ideally, to make it easy, like the easy path forward would be to not take out this high around 4,200, right? This high right there, right at the middle of the square. And, and then we come back down and test the lows and whatever we have to do around 4,000, let's say. That would make things easier. Now, if we take that out somehow, then, it's a more complicated market we have to analyze one way or the other. But anyway, let's break it down and see where we are and how we got here. And hey, what was this percent thing? I put these on after you talked about, I don't know if it was 12% you were talking about, it was 15%.
Remember, those are rallies off the low.
Yeah, so bear market, you were saying something. Was that the 15, the number?
Yeah, the average is, of the last few bear markets is somewhere around 15-16%.
So that would be right in that range, around 41.90, 42. So that's
right.
Coming up right into that. All right, let's break this down a little bit. So breaking it down, last week we talked about the half square, and if we hold it, we can get up into the test the 4100 at least at the upper end of the zone that we had drawn out earlier. And the fact that we got through it so easily means there's a lot more strength. Yeah, that's basically what it means.
Yeah,
and it's clearly looks like a third wave kind of a move. You know, if you take this to be one, then you get a little ABC down, and now we have an ABC to the upside. And I did actually, let me pull out this other. This is so this would be ABC up. You know, that would be the third, right? We got 1, 2, and then a 3. The ideal, well, the swing, the equal swing would be around 42.07, let's say. But I was looking at the geometry, you know, whereas, you know, it's about a, you know, it's almost 100-point spread there in that box. But 42, you know, 42.07 is about, you know, where
almost the mid-range of your box there.
Yeah, it's a mid-range, but it could go as high as, you know, 42.60 or so, or as low as 41.64. And how I got to 41.64 was I looked at this last swing going into the high, right? If you take that, this leg would match that.
Nice.
Right? That's where we get the last turn. So it's possible that we go here and we balance out and we turn down again. And if we don't, well, if we don't balance there, that means we have a lot more left in this. So that's how you'll have to, at least that's how I judge, well, you know, how much fuel's left in the tank.
Sure.
And we also have this formation that we broke down from. So ideally, it's funny, the high of that comes in pretty much exactly at that ABC finishing up. You see that? And, you know, that can't be an accident.
Nope.
Right? So it's all locked into place. We'll see how it plays out. But I'm just saying, these are, you know, when you're long, these are the areas to watch for, you know, especially if you're playing short term. These are the areas you want to watch for. Now, getting back into the daily, let's clean up the chart a little bit. And so 40.50 we're done with. 4100 we're done with that. And the target I have left on there would be 41.64.
So that's your first resistance area.
Yeah, that's a resistance area. And that's in that box on the 4 hour we just looked at. 41.57, right? Was the number? No, it was 42. Sorry, 42.60, 57.
42.57, 41.64.
So the other one is 42.60 is, so the box is right in there between these two, 41.64 and 42.60. And of course, we have the 72-degree square right in the middle of that.
Nice.
So clearly, this
good target
area,
zone.
Yeah, it's definitely a zone. We'll see how the zone plays out. And it might be time to actually maybe, you know, these zones kind of wear out after a while. So,
where's your support now? Where's your go, no go sort of line this week?
well, 41, I think 41 and then 40.50. I mean, that's it. Those are the only two, because really the major level is still down here, you know, at, you know, 39.50 or so, going by the square. Because with this leg, there's really no, I mean, if you look at it, technically it'll have to come all the way back here, or at least to here. That's 40.21, right? So I would say 4100 is sort of important to hold. What you want to watch is you don't want this breaking 4100 and getting stuck below that, you know, and then all the internals go negative, you know, that's about enough time. And coming down to 40.50 is fine. That would be a normal sort of a pullback. And anything not being able to get traction after that and getting stuck under 41, that's kind of the play here. After a big run like this, you want to see where is it going to consolidate. Now here, if we can run up a little higher and consolidate above 41, okay, fine. We still have some juice left to go up and test this, you know, this box area up here. So we'll wait and see how that plays out. There are some daily timing cycles that are coming in around August 3rd. I think we have a 45 degrees from the low coming up in there.
Yeah, there you go.
So that's on the second, say figure, you know, 44.9. So let's say second, third, right? And we're about 210 from up here, from the high, if you take the square 60. And there's some other little ones, I think 90 from somewhere else. So next week, the second, third, fourth time period, we do have some cycles expiring. So you really have to watch it, especially if it combines with some of these numbers that we talked about and the zones that we talked about. Anything you want to add?
Well, just that in looking at your waves, you had the 1, 2, this is 3. Maybe we get a couple more days of push higher to finish off the 3, and then we've got a 4 theoretically coming after. So that could,
we could run into up here and then do the 4th,
and then have one more push.
The key would be to see if we can do the 4th above 41.64, or if we can do it, down below. And not to say that we can't have a 5th failure up here if we're really still in the bear market, right? We could have a ABC and finish it up here and be done with it, act like a 4 and then roll over. So
true.
So it's critical. I hate this because every week there's a lot of work.
Yeah.
At least when we get to these cycles expiring, we got 45 days, we got this and that, and we got timing coming up. So we really have to be alert. But down here, once we put the low in, we kept talking about it. Well, as long as the low's in, push to the upside, we clear the levels. So everything is all very easy. Now we get to a point where we have to really look at what's going to happen next. So,
the turns are never easy, are they?
Yeah, no, they're not easy. They're easy once you get past them.
Yeah, exactly. In hindsight, they're real easy.
So here's the weekly.
Nice breakout.
Yeah, nice breakout. And the low came at 72 perfectly. We talked about that. So we were comfortable with this low. It was just that, hey, do we have enough to break through? And we cleared these levels, that we were watching. So breakthrough was okay. So basis weekly, really the next place to tango would be like this 42.25, 42.30 level, right?
Which is in the neighborhood of your daily 42.60. I mean, it's all
it's close enough. And in the bear market, the 50% retracement is kind of important. So it's all kind of sets up into that same area. So for now, we're just let it run and we'll see how it works out. At least we know, we kind of know the area to watch. And on a 4-hour, that's kind of what I'm watching next week. How it goes.
Yeah, it's good. Real good targeting.
And you're 15% in here. So
yep. Right. It's all right in there.
It's almost too much, right? It's like too many things in there.
Yeah, I mean, we know to think like a criminal, right? You got to say, okay, everybody's looking for that, so they're going to push right through it and do some sort of false break or some sort of craziness. We'll have to see. Well,
for all that to happen, we have to clear this. We can clear that and we get on top of it. All right, fine. Then we'll deal with that. But for now, we're coming right up into this big build.
Big resistance area.
Resistance. All right, let's move on to bonds. We left off last week. Bonds are kind of easy right now because they're just doing the right thing. We made the lower on 132 that we had talked about weeks ago. We started moving higher off of that low. And then we cleared the 216 line. That's 216 from the high, where 72. And then we basically looked for it to hold and trade above the square, which it did.
It did. Yep.
And we talked about if it clears 140, that we're probably going to go test 146. And it cleared 140, took out the trend line, consolidated right on top of it. It's almost like a pullback to retest it. You see that?
Yep.
And now we're moving. So 146 is really the next big resistance in bonds. And I just wanted to update it's always good to have a ABCD for reference just to see where the hell things are going. So
yep.
Just out of habit.
So
that goes up right up into 147. So
I got weekly resistance 147 and 1/8 and monthly resistance 147 and 1/2. It's all right in there.
Ooh, right in there. So
yep.
So that would be
it's a good target
we're looking at. So it's right in there.
All
right, let's go on to the weekly and take a look. Well, weekly's rather simple. We came down to the half square here. We called that support, started moving higher. And here's that 141.03 we've been watching. We wanted it to break and hold above, and you can see last week's low where that was, right? Clear enough. So now we're getting, the full square 72 would be 150. We'll see if we get there or if we kind of run out of steam before that at some of those other targets.
Right. Stall out at 147, 148 and can't even make it to there. We'll see.
Yeah. So 150 would be, right there, a little higher. And so we have these other numbers here. We'll see how that plays out. But it has a little bit of room to go. To the downside, obviously 140 is still the key support level for now. I'll work up some numbers next week when we get a little higher.
I'd say we're not macro experts by any means, but it's really nice when you see technicals in one market fit with another market from a theme of how the market's been trading. Like when bonds have been strong, equities have been strong.
Right.
When bonds have been weak this year, equities have been weak. So the technicals are lining up right now in both bonds and equities. So it's kind of nice that they fit in.
Let's move on to crude. We left it off here last week, the square 72. Well, we have the numbers here, 91 to the downside and 97. This is 95, 97 has really been our sort of the zone here. And the idea being, as long as we're holding above that, it's sort of, ready to move higher. Now, if we get under 95, let's say 95, 91 range, we get under the square, then
that's trouble.
Well, if it gets under, then we're probably going to go and test the 77 area, which is the half square.
Half square. Yep.
So for now, last couple of weeks, we've managed to hang in there, and it's working a little ABCD, kind of made it up to there. So far, it's amazing, how these lows have been holding.
Really good.
So many months.
Yeah.
Let's look at the weekly crude. Same story. Square 90. I don't know, that square looked too big. Let me put a 45, break it down a little bit.
There you go.
A little easier to see.
It's good.
So this 90 is the level that we're watching, and you can see how the highs and lows are made exactly 1/8 off of that. Right, last week's high was 1/8 above that, and prior it was 1/8 below that. So that's really the box.
Yeah, it's just vibrating around that 90.
You see that right there? Yeah. And well, it's not done, so it's consolidating. So we'll see what happens.
Yeah, go back to the daily for a second because I wanted to comment on one thing. I have monthly resistance at 101, and you can see how it keeps banging up against that. It can't quite get over 101.
Exactly. Yeah, very good.
Right in there.
Monthly, you say?
That's the monthly. Yeah, monthly.
So if we break that to the upside, get on top of that.
It's a go. Yep.
That's a go. Yeah, that would be a go back to test these.
Yep. Agreed.
And
your weekly box is perfect because it's just accurately capturing the battle at that 90 basically. Each side can get an eighth over, but that's it. They can't push it.
And they
too
come
far
back to
away.
the middle,
Yep.
mean reversion back to the 90.
Yep, they can't.
Coming off
They
that
can't
low.
get far away. So we know the battle lines there. That's real good. Real good stuff.
Let's move on to gold.
That had a nice week, didn't it?
Yeah, I had a very good week. So here, it's like everybody had a good week. Well, this is sort of the mirror of the, reflection of the dollar, right? Dollar.
Yeah, absolutely.
Gold picked it up. So to pick up where we left off, and you guys, if this is the first time, please go back and look at some of the old last few episodes to catch up to the story, because we both use the same charts every week and we keep them updated. So if you go back 3 months, it'll be the same charts, same set of charts.
Just a different section of the story, right?
Yeah, different chapter. So so it's easier to sort of see, and also to see how the market played out with the numbers and patterns that we talk about. So it's helpful to go back and look. And also, if you like our work, please click on like and share the videos and subscribe. That helps the channel grow and get us motivated. If nothing else. Well, the reason we do it is because it forces us to do some work over the weekend, and both of us being sort of used to be lazy, right? That forced us to go back and look at everything. And so now we like it. So it's good. Even if you guys don't like it, it's okay. We do them because it's useful.
Absolutely.
Anyway, getting back to gold, we had this support at 1676, and we got pretty close to it.
Yep.
And we had this square at 90, and it was really kind of a we broke through it a little bit, but not more than an eighth, which is sort of the signal that I normally look at, and that's where I got that 1676. You always want to go an eighth beyond any square, because that would be called like the overshoot or the overrun. And you can
or the fuckery, as I like to say.
Yeah, pretty much the same thing.
Right.
But here, we knew where that level was, and you can see how it came right to it and flipped around. So I think the 90s still probably active. And if you look at the 72, it didn't quite get to the half. So it was definitely the 90. It just ran that extra eighth, right? Like it normally does. But I think it might be good to switch. So here's the 90. Now we have all this overhead up here. So we have to get through that. So 1832 area is really where we're looking for. It's an old level that we had. But I think 72 might not be a bad place, because it did capture everything fairly well on the way down. And if you look at that, and gold's in good shape, we need to clear 1792, which would be the square of 72 coming off the high. If we clear that with ease and we get on top of that somehow, so we're above these lows, at least that low and that low here, then we're back in action, right? We'll flip back to the positive side. But longs are below the 72. It could be consolidating mode, not necessarily rally. So we'll have to watch it. I'll be watching the 72, because I think it's a good early warning sort of a line, especially since it sort of caught that low nicely.
Yeah,
so we'll
fits really nicely. Yep.
But we know what happened with the 90, the square of 90 that came in here. So we're kind of keeping an eye on that. That's like a template. If that low really came in, we're not coming back to 1767 anytime soon. So they got to watch that next pullback, and we'll play it out.
As always with the corners, it's all about that first pullback, isn't it?
That's right. That's a big secret, right? That really is. I mean, all my work's ever been about that first pullback. So
sure.
Speaking of pullback, what was I doing? So this is the gold weekly, and I wanted to go back and see how everything fits, because I'm always.
That's a nice fit right there.
It's a nice fit, and we've been talking about this for every week for the last few months. So I got a little bored and went back to look. So went back to low in 1999, and if you just drop a square at 90, you can see how it it played out pretty well.
Really
What's
nicely.
really important is how it played out here,
and
you can see where the old lows came in.
Right on the old highs.
Yeah, I mean, old highs were right at the 180-degree mark.
Yep.
And if you see, last couple of years, all the lows are above that, right? So this is this whole theme about, holding above the square or below the square and all that business. Like here, for example, you see how we ran up into the 90, but couldn't hold above it. It was below, right? So what happens below? It's weak. Yeah, bounce back down, up, bounce back down, right? Bounce back down, bounce back down. And finally, when it broke through is when we got the run.
And it goes, yeah.
This whole time, over a year, we were stuck below that 90. Yeah.
And now for a whole year, we've almost 2 years
above.
we've been stuck above. That's right.
Yeah. Now we're above the 180, which is it's a significant level. So
now people know why you and I have been pounding the table about gold for so long.
That's right. That's right. And we can't, we can't cover all the charts every week, but this is, I wanted to bring this up just to kind of put things in perspective, just to show. And you can see all through the 20 teens, we were basically flirting with this half line, right? The 135. And again, it really couldn't take it. And once you took it,
it's gone.
up and away. now the key thing is, that's why holding these lows were really important. We were watching that really closely. And, not to say that it might not come back and tag it again, but that's the level we want to watch. Okay,
Excellent. Yep.
let's move on to the dollar.
Perfect example of what you talk about at a decision point. Look at that.
There we go. So we talked about holding above, and we had that 107.50 or 25. This area being the key. If either we hold above it and we go higher and test this 112 area, or we hold below and we pull back to test lower. And it's still in a very strong position. Not to say that it's but we did get these 3 drives going into that.
We did. Yep.
And we had a 45-day blow off kind of a move, which was an ABCD. So, listen, the dollar could have a high in place. All this stuff could be wrapping up quickly here. This time cycles can, like an accordion, right? Sometimes it feels like it's getting pulled out. All the cycles are coming in slow. Sometimes they all speed up. And we could be having one of those moments. But so far, holding it below this 107.25 was the key. And you can see how it weakened up. But this could be just another a pullback, and maybe we'll go up and fail next, or we might go higher. But we want to watch this lower trend line, and also 105 being being a key level to watch, because that will be quarter of the square of square of 72. That we're going to watch for next week. Yeah, so we had 107.50 area to be, we really had to hold above this 106.75, 107.50. That was a zone to get on top of.
I couldn't do it.
We couldn't do it. So, but what we did do? We came up pretty damn close to this measured move we had. Look at that.
Wow, nice.
Is that cool or what?
Yeah, really cool.
And that's exactly, size of this.
Yep.
So, we might be done here.
Yep.
Also might be, a few more weeks to really finish it up, but you really can't argue with this stuff, right? It's
nope.
there.
That's good.
Like I said, it'd be nice if we can go in and finish it up on the 90 weeks. That would be ideal. But for now, we're gonna be a little cautious and watch, because of these kind of hard blow-offs don't necessarily stop on a dime.
No,
not necessarily. So we'll watch it, but we do have the early signs of it,
faltering for sure.
Yeah. Let's see here. See if a smaller square would make any more sense.
No, there's a failure at 144.
Yeah, 144 held pretty well. 52 really got it.
Up. Yep.
Price and time, and this being a weekly chart.
That's big.
Every weekly chart, I always use 52 weeks to a year, right? So it's a good chart to watch. And you can see we hit the 156 on the mark, square and a half.
3 up and a half square, 1.5 up in time.
So that's why I said this 105 is kind of important to watch. Well, let's say 105 and a half be the half square. Basis weekly, I'll just leave the square up here. We can follow up with this next week. But it's ideal if we can hold above this, right? That would be
that would be bullish.
That would be the best thing. Because if you look at all these moves, none of them were really more than that. So if we can hold that, or within a couple of cents, and then we'll see. But if we get under that, then I think we're probably done for a bit. Then lastly, we have euro, 240 degrees down, came into the low, and we talked about a rally to go up and test the half square around 103, and looks like we're trying to do that best as it can. And from the looks of it, either we do an ABCD up, or and if we can't get above this, we're probably going to consolidate longer.
Chop around,
Chop around through whatever control mechanisms in play, right? So an ABCD would get us up into here. And even then, really the big resistance at the 180, around 106. This is still a little early in the game. And looking at the weekly euro, we left it off with this chart last week. If we can get above this half, then we're looking at the 1/3 of the square, which would be about let's say 105 to keep
Mhm.
numbers easy. But the key would be to get through this, let's say 102.5
Mhm.
is the number to watch to the upside. And I'm not really sure if we're done here, just because we came to parity and, checked it out. I think I asked you if that's, it's some kind of a bounce sort of guaranteed.
Right. Algo bounce.
So we'll wait and see. I'm not that interested in this at this point, other than to watch the next key resistance, see where we come up into. And so we'll see how that plays out. Next week, I'm not expecting a whole lot other than to
Sure.
go up and test this area. And clearing that, then we'll go up into the 105s.
Mhm.
Okay. All right. That's it for me. Let me put it back to you.
Excellent review. And now you can see why we're so excited right now. And there's a lot of work to do because a lot of critical spots for different markets.
A lot of work, but also a lot of opportunity. When the market's
Lots of
moving,
opportunity.
we were just talking about it earlier. It's like there's so many things to trade, and you try to simplify things just so you can track them. All right, I'll stop and put it over to you.
Okay.
All right, what do you got for us there, Ben?
So here's your NQs. And, we talked about this half square being a critical spot, came down and tested it. Boom. Now the critical spot is the full
Easy
square.
money, Ben. Easy money.
now the critical spot is the full square. And, the full square, you're talking about this, 12.7, call it 12.775 area.
And Friday low caught, that was a retest, right? From Thursday's close.
Right there.
Came back into Friday low and then took off.
So that's the focus to see, make sure we hold that. As long as we hold that, it's 13,400 half square.
All right.
The only other thing I really want to point out on the chart is timing wise.
Mm-hmm.
The bear market rallies have, 23 has been a good, 23 days has been a good sort of timeline. On the way
half
down,
of the 45 cycle. So yeah.
On the way down, we did 47s, which is kind of interesting. High to low, low to low. So I said, well, what if we double that, 23, because, this is a, as you were showing on the ES, a 1, 2, sort of 3 here move. If we double it, we get to August 19th, 47 would be August 22nd. So the 20th to 22nd are areas timing wise that fit with the bigger cycle that we're looking at, which is, I've talked about that, in tweets to the followers. There's big cycles hitting here in August that, we've had this window sort of marked off all year looking for this area and this time. So we got to really watch it. As you were saying, with your work, you got other stuff firing off coming up in this month. So it's time to be vigilant and see, what we're going to do going into and coming out of this timing window. Anything else to add here on NQs?
Oh, we're good.
Okay. Let's go to the grains, which we mentioned we were going to look at. Here's wheat. The super interesting thing about wheat, which I'm really excited about, is we've got a fully formed 3 drives. 1, 2, 3. We pushed it a little further than the full square, and guess what, Barry? Look, it's an 8th. Surprise, right? There's your 8th. Bounced hard off the 8th, right into the half square. So this week we get the pullback. This is what we want to watch. If we sit on top of this full square, if we don't even make it down to the full square and can reverse, it's a really good sign that we've got a good bottom in here, a tradable low that we can ride wheat up. How high it's going to go, who knows? We'll play it level to level. But here's the setup that we want. This first pullback off the initial thrust, we want to make sure it holds this level. Or if it can't even get to the level, it shows even more strength, and then we play that reversal because that's the move we want to catch. Interesting thing is if you look at where this came in, if you look at this price action here, sitting on top of all this stuff back from, last year, April, May, June, July, August, September, October, all that price action. So wheat looks very bullish to me. We had the confirmed low right now. It looks good with the 3 drives, and we had a square here, 135 by 45 at this low. So the next pullback is going to tell us all we need to know about, what's the highest probability event coming out of that move.
Mhm.
Anything else to add on wheat?
We're good. I say buckle up.
Buckle up and pay attention.
Yeah.
All right, let's jump to corn. Corn's very, very similar. We didn't quite get a perfectly formed 3 drives. There's a 3 drives here, 1, 2, 3. This one happens to be higher, so it doesn't really qualify as a 3 drive pattern. But the effect is the same. We came into a low, the full square here, couldn't even make it down to that, and then we shot out of here this past week. Friday afternoon, in all the grains, there was some profit taken. You can see, the high came, up here, and we closed, nearer to the low. So I wouldn't be surprised if we don't hold this full square on the pullback that looks like is coming. What we want to see is it, either hold this trend line or hold this half square. If we get this pullback, same setup as wheat, you got your first thrust up, pull back with a higher low, and you want to be on that for the next move up. What else can I add into corn? Oh, all the levels, instead of, going through and reading them out to you, we have a spreadsheet that we post a link to every single week. The levels are all updated in there, so you can find all the levels for the squares for all markets in that spreadsheet. Anything else you want to add to corn here?
No, I think we'll be covering it every week, so we'll watch the next pullback and wait for that.
Yeah, but the next pullback, as Barrie said, this is key. This gives us the ability to stack odds in our favor about what's going to happen next. Here was the stellar performer from last week that we talked about on last week's show, and that was soybeans. Last week's show was right here, right? We said, okay, we've got an ABC down into support. This is where we closed last Friday, by the way.
Mm-hmm.
We were on the half square. Barrie was like, oh my God, that's a market I'm watching for sure this coming week. ABCD down, sharp correction, right into a full square. And look what you get.
Right after the reversal.
Yep.
Bada bam. Okay.
And so, and this kind of price action tells you that, okay, that something ended there and now something different is happening. So what are we looking for in beans? Same thing we're looking for in corn. Same thing we're looking for in wheat. We closed off of the highs on Friday. It looks like we're going to get a correction starting. Where does this higher low, if the higher low is coming in, where does it come in? Does it come in here and then it shows real strength where they can't even get below the half square? Or does it get down to the full square? Or do we push the full square a little bit and come into here? I have no idea where that's going to come in. What we're just watching for is, now that we've had the first thrust, where's the next pullback, and then play the reversal for the upside. Also, if you look, the low came in, above this whole structure that we saw last, fall and winter.
Yeah, you called that out a couple of weeks ago, I think.
Absolutely, and that's very bullish. So we're just looking for the entry here on the next leg, because if even if we just do an ABC, it's going to push you up in here price wise. Anything else to add on the beans?
No, we're good.
Okay, you covered gold really, really well, so I don't need to say anything about gold. So, but let's go look at. There's its little brother, silver. Silver had a beautiful week. You can see what happened 3 days in a row. I mean, closing at the highs for 3 straight days.
Right.
That's a serious move. So what we were talking about last week was, we said, look, we're near the lows here. We don't know if this is the low, but we want to keep our eyes peeled on silver as well as gold, because, we were banging around above and then under this full square. And we said, listen, this is the decision point. Either we're going to get stuck below this and there's another leg down, or we're going to get above it. And if we can sit on top, it means the low is in and the next phase up in silver started. But we certainly, crossed the full square. And the full square here is in the, call it 1885 area, 1888. So we pushed above it. Now let's see what happens. Do we stop at the half square here this week? Call that 2077. Do we stop in that area, which, you can see structurally there were some lows here on the way down. So that would make sense that we pause there. Then we want to see the next pullback in silver, stay on top of this full square, give us a higher low, and then give us the platform where the odds will favor that we're going to move much higher.
Mm-hmm.
This kind of price action is really, really bullish, right? 3 days in a row, we closed the highs. We pushed right through that resistance easily on that big bar. The other bar couldn't even come down and touch it. So we're on the alert for a high probability successful trade in silver on the next pullback. Anything else you can add here on silver?
Well, it's a good start.
Absolutely. Looks really good. Now let's go to the other metal that I was tweeting about the last few weeks. Copper. We had a square at the low on a half square. Again, it's a heads up to watch what's going on, watch what's happening, see if you can find a good entry on a pullback on a lower time frame. We came up, had a battle at this full square, 3, 4, 5 days worth of battle here at the, call it 340 area, 339, pushed right through. Again, it's a bullish sign that, something ended here on a square out. We've pushed through this full square. Now we want to see the next decision point is what's going to happen in this, 362, 363 area. Wouldn't be surprised if we, stalled and pulled back. Does the pullback stay on top of this full square and give us that, again, high probability entry where we can catch the next move higher?
Mm-hmm.
This low also came in, on top of this structure over here where we had, highs in late 2020. So again, copper looks bullish to me. It's a matter of finding a spot on the next pullback that gives us a good high probability entry. What do you see when you're looking at copper here?
Well, a potential start. I think like a lot of these things, all the commodities sort of corrected for a while, and now we're starting to put in some lows, starting to move up. So we have to start trading it. That's about
Absolutely.
it. Yeah.
Polish up your entry moves because they're going to be needed in the next few weeks.
In months.
10 months, yeah. Let's jump over and do a couple softs, and then that'll be it for me. Been talking about cotton as well. We had a good square out on this low. Didn't quite make it down to the half square. That extra eighth it teased everybody with. In a good area of previous highs and previous stalling out of the move higher. So this
good zone, good support zone.
Catching support there is really good. We pushed up above the square and then had a battle for 3 or 4 or 5 days here, right at this important square, which price wise is, call it 91.70. And then early last week we pushed up through it. And again, it's a similar pattern that we're seeing in all these corners. Here we had a pullback and then we're launching off of it. So maybe we're going to go up and do an ABCD, up into this, middle half square area around 104. But the key is, can we now stay above this full square? As long as we're above that, we've got the bullish platform for a nice move higher in copper. I mean, the target, I said when I was talking about this trade, if you really look at it, if we can get above that half square, you're talking about 116, 117 on the full square here. So evidence is mounting, like in a lot of these commodities, evidence is mounting that the corrective phase that we were going through for, 3, 4, 6 months, depending on the market you're looking at, has ended. And now we're trying to figure out in a favorable risk reward way, can we get involved bullishly in these markets and ride, what could start out as a counter trend or could be the next leg higher. Anything else to add here on copper? Not cotton, sorry, not copper.
Yeah, cotton. Well, it's like all the commodities, right? They all corrected. Now we're just trying to confirm the lows and waiting for the pullbacks to start setting up. Cotton already set up right at the square. That was good.
Here, right here.
Right. So it's just stay with it.
Amen.
And we have to watch, the thing is, in this first round, we had to really watch the resistance levels. So when we get up to those half squares, like especially in cotton, when we get up to that half square, it's going to be a key level to watch.
Absolutely.
We clear level by level. So
let's go to the next one. Here's a new one. Been trying to find this bottom for a while, and I think we have a decent structure here now to look at. First thing I'll point out is you have a nice 3 drive pattern. 1, 2, 3. Washed out these the people that said, oh, this is the low, washed them out, and now we're pushing up off of this. The reason why I'm liking this is not only the 3 drive pattern, but now we're getting bars that are holding on this full square. On a longer term basis, this 210 to 212 area, monthly, weekly, was really, really important. And if you look at the lows on Thursday and Friday, they're right there on top of it. So we're beginning to exhibit behavior where we're sitting on top of this important square and important support. You can see why it's important. It was the highs last summer and last fall. And if we can recapture that and sit on top here, then we can begin attacking. And this whole consolidation, which it really has not been a major correction like cotton or copper or some of these other commodities. It's been a sideways correction, really, for the last, 6-7 months. And now, as we begin to sit on top of here, we're ready for the next leg higher. So I'm really, really bullish on coffee. At the low, on a shorter time frame, we did a 90 by 90 square. So I think this thing is really setting up for a very bullish trade to become involved here. I know you've been looking at coffee on and on yourself. What do you see here?
Well, I'm cautiously approaching it. Let's just say the setup looks good so far. It didn't sell off as much as, well, let's say cotton, right? For example.
Right.
So,
right.
But it looks good as we hold these levels. I think it's going to get into stride here.
Yes, to pay close attention. That's the key message from this week, is that we are in a major big picture cycle window. The commodities are bottoming, as a group, across the board. We're seeing price action that's showing into a major cycle window. We're seeing price action that's showing us that the corrections are ending. So the bottom line is, it's time to pay attention. It's time to look for good setups in these markets that give us, an edge about what's coming next. And that's really why I'm excited, and why there's a lot of work to do, is because a lot of markets are setting up, and you don't want to miss it. You don't want to miss these moves, because these are the moves that can make your year. You catch a couple of these on a third wave type action in the commodity world, and you make your year.
Well, looking at some of these bigger cycles that are potentially kicking in, it could be, lifetimes worth of trading.
Yeah.
In a few years. So we have to really watch this leg, this next few months, to see how it plays out. And that's why you will want to be cautious at the first turn. You want to make sure it's setting up correctly. And, you can trade like, what we've been doing, and you, as you get more confirmation, you can be more aggressive with it. So.
Absolutely. And again, it's why we're on red alert. You can see from Barrie's review of the big 5, it's not just commodities. It's almost all the major markets are at an inflection type point. So, and our job is to try and listen to the market and find these spots, based on the price action and the data that we're getting, where you can create a really favorable risk reward setup. So that's the goal. Well, thanks everybody. Hope you have a great week. Barry, have a great week and good job. And let's see what this month of August is going to bring us.
It's going to be a busy one and a good one. I have a feeling.
Absolutely. I'm with you on that. Take care, everybody.
Yeah, good coverage and have a good week, everybody. Bye-bye.
All right. Bye.
Thanks, Ben.